All right. Good morning. Happy hump day. Happy volatility week. Market's been a little crazy, a little all over the place. Um, we're going to go over some things here in a minute. But first, if you're new, welcome to our live stream. We do this every Wednesday we start at 9 a.m. Eastern and we start live streaming. And the whole purpose of the live stream is to, one, demonstrate what I do, the advice that I give, the levels, the different things that we do in my room, and also, more importantly, to just demonstrate IWJ Pivot Point Pro. It is the indicator we have created for TradingView, and it is absolutely killing the market overall in the long term. We have over 20 months of data on it now, and it's produced 60% returns over that time on a 100K account. So, absolutely killing it with it. If you are new, this is a trading view only indicator. And what it does is it gives buys and sells at reversal points. Um, this is all pre-market trading, the light blue over here. I'm on the ES right now. I'm going to go over to the SPY real quick so you can kind of see a little differently. So the light blue over here is post-market trading. It's what happens after the market closes. The yellow is pre-market trading. It's what happens in the morning after the market reopens. And we keep that on so that the indicator can have proper signals, but we never trade it. There's not enough volume here. It's kind of a weird, choppy mess most of the time. And we just kind of stay away from trading after hours in the U.S. markets because that's not where the volume is. That's not where the key levels are, but it's where they are created. So that's kind of an important concept. The pre-market high, the pre-market low, all of those things are very critical levels and things to trade off of. And then we also have on our screen what's called Mentor Q. You can see it's called Mentor Q right here. And Mentor Q is an incredible software. There's a link in the description on how to get it, and you get 20% off if you want to try it out. It gives you these incredible numbers like a one-day max that tells us, hey, the market is very unlikely to go past this number for the day. Now, when I say go past, it can poke above it and it can move through it. And there are times it blows through it, like last Friday, it blew through the one-day minimum because of how much volatility and how much selling there was. But if you think of it like a shoreline, we know how the tides work, and we build houses based on that on the waterfront of the ocean, so that when the high tides come up, they're not coming into our living room. Well, during a hurricane, which are rare occurrences in most places, except South Carolina lately, when you think of a hurricane, it pushes that surge beyond the shoreline. So yes, there are times it goes past the one-day min and one-day max, but those are rare, and more often than not, this will contain the move for the day. Does that mean it's going to dead stop here and turn down? No, not necessarily. They can come up here and then come back down below it. It means that they're probably going to close below this number. And that is a key thing to know when you're long. It's a great place to take profit. If you want to short, it's a great place if they reject that area to try to short. So Mentor Q gives you this, and this is based on options contracts. And the market makers, if you buy an option or you're selling buy a put or a call, the market makers are generally the ones selling you back the other side of that. So if you buy something, somebody has to sell it to you. So real quick tutorial on price action. These levels are heavily, 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 heavily bought calls. And that means that if they get above this, all of the calls at this level have to be paid out, and they have to be paid out by the market makers. So the market makers defend this area furiously because they don't want to pay that out. And if they do get above it, like they did, or below it, like they did last Friday, very often you see cascading events like a hurricane because the market makers now have to start covering themselves. So they got to start buying calls as well to hedge what they've sold here. So these levels are really good. This is our 0 DTE call wall. As long as they're above that today, they're in positive gamma, which will push the market up. If they get back below that, we get into kind of a neutral zone. And then below the put support here puts us in negative gamma, which would push us down. Now on the screen, you do see 2 one-day maxes. That is not a normal occurrence. And what we have right now is really high volatility. So or higher, not really high, higher volatility than we've had recently. And so the market makers are a little bit unsure. And so we have 2 one-day maxes. They are through this one-day max pretty decisively. So this is the next major level to defend. As you can see, when they got through this 1-day max, they squeezed because the market makers had to cover down here. So they got through, they squeezed. This is the next major target. And it happens to coincide with a major target for us on the ES, which we'll go through in just a minute. So what you're seeing on the screen is our indicator. That's the sells you'll see here and the buys at the bottom. And you're seeing Mentor Q. Both of those, there's links in the description on how to get them and test them out. Now, if you do want to get the indicator, go over to Invest with Jacob. Like I said, there's a link. We'll do that right now just so you can see. Go over to Invest with Jacob. You'll go to membership plans. And on membership plans, you will scroll down. You'll see my monthly rooms, live calls, and you'll see trading view indicators. Now, the cool thing about our indicator is I give you a 30-day money-back guarantee on both the yearly and the monthly, because it's important to me that you get a product that you love and don't waste your money. I'm not here. This is a low price. I can tell you right now, most people charge $199 to $999 for their indicators. This is a very low price, and it's a very powerful indicator. And that's because I'm not here to price gouge. I'm not here to rip people off. I'm here to give you quality tools at a fair price, because I don't want all of your capital. I want you to be able to trade and make money and succeed. And I also want to make money too. That's capitalism at its finest. But I also want you to be happy. So if you're not happy, you have 30 days to check it out. And what I tell people is, if you're unsure, go ahead and get it. Obviously, I'm going to say that, but here's why. Not because I want you to give me $59. Of course, I want you as a customer, and I want you to be happy, and I want you to make money, but because you can simply put it on your chart and just watch it for a month, or you can paper trade it for a month following our rules and see if you are getting the results we want you to get. And at the end of a month, you have risked nothing, because you're just either watching it or paper trading it, and you've only spent the $59, and if you don't like it, you get that $59 back. So you have no risk whatsoever just to look at it and see if you like it. That's what I tell people, because if you're unsure about it, you really have no risk. You might as well see what it's about. The yearly, you get the same deal, except you get 2 months for free. So obviously $59 times 10 is $590. So you get the 11th and 12th month for free. And you also still get the 30-day money-back guarantee. So if you don't like it, you can do that as well. Now, we are running a promotion, as you can see on the screen, 30% off of the first month if you want to try it out. So you can even try it out at a cheaper price. And if you get the yearly indicator, I'll give you our advanced Elliott Wave course down here, which is $147, and our beginner's course, which is $67. I have them as a bundle. So that's $177 value you get back as well. And you get to keep that even if you return the indicator. So I highly encourage people to check it out for themselves, because we're going to demonstrate it here, but one day does not make a trading tool. One thing that's extremely important to understand is how trading works. Trading is not a game of ultimate wins, meaning you're never going to find a tool that's a 100% winner or a 90% winner or whatever. It's just really hard to do day trading in the market. But if you find an edge in the market, you know, if we win 65% of our trades and you apply that edge relentlessly, you are going to make money. Does that mean if we win 65% of our trades, we're going to win 6 trades and lose 3 trades? No. We could lose 10 in a row. We could lose 20 in a row. We've done it. It sucks. But we've also won a whole bunch in a row. There's losing streaks, there's winning streaks, but simply put, there is an edge. And that's what you're looking for when you trade, is an edge. Traders aren't looking for these get-rich-quick schemes, or these quote-unquote 90% winners and all these things that aren't just out there. They're marketing lies and things like that. We're very upfront, because I want you to understand how trading works and how the best traders in the world work. Every one of them has losing trades. Every one of them has lots of losing trades. And I would not guarantee, that's not a fair word, I would bet that most of them have been liquidated at some point in their life, because we all get greedy and stupid, especially when we're first starting in the trading game. So all trading is a game of discipline and following rules. It's really simple. And I give you all the rules right here. Once you get the indicator, you go to this page, and you'll have to give me your TradingView username. That way I can give you access to the indicator. And then you come down and we tell you how to set up your TradingView account for it. We tell you how to set up the indicator. We tell you our day trading strategy, our swing trading strategy, and our trend day strategy, which is basically not trading, because we don't trade against the trend. And our indicator is looking for reversals. So when you have a trend, that means you're breaking through support or you're breaking through resistance. The indicator is looking for high levels of support and resistance to hold, and we're trading off of that, which is it's price action 101 really. It has about 175 inputs that it calculates, and then it gives you a buy or sell. And what we're looking for right out of the gate is a quick 20% win where we close half the trade, and then we're looking for runners after that. And what I mean by that is we set, a baseline. So we get in, let's say we get in right here at a sell or a buy, rather, let's say a buy. And we have our first take profit here at 20%. And then we have our stop down here where 50 cents below the SPY price. If you get this small win and this small win and this loss, and then you get one that's a runner, so we hit the 20%, we take profit, and it keeps going, these two and this 20% here will essentially cancel out your losses so that all of our runners are essentially profit. So our risk reward is really, really strong because we win enough to cancel out our risk here, and we've just updated our risk actually to minimize it even more, which is really powerful. All of our runners become profit. So we cancel out everything of our stop losses down here, and then we get several runners. We're going to look at yesterday and the day before on how that works. So yesterday was, actually we'll look at the last few days. Yesterday was Tuesday, right? Right out of the gate, we got a sell up here at around 657 or so. They ran it all the way down to 653. It was a 4-point move straight down. That's an incredible trade. Then we got in here at about 655 or so. They ran it 7 points straight up. That's an incredible trade. Then we actually got a small win right here as a 10% winner on this move down. We took our 20% profit. We got stopped out on the way back up to net a 10% win. And then that gave us a trend day up, the parameters for a trend day hit. So we ignored the rest of the trades after that. We only trade till 10 a.m. Pacific, 1 p.m. Eastern, because after that the market gets pretty choppy and boring. You can see up here it chopped forever, and then at the close it moved again. So we had 3 winners yesterday, no losers, and 2 of them were absolute crushers. So the day before that, this sell right here was a winner. This one was really unfortunate. The way it worked out, this little tiny bounce here stopped us out. But in essence, the indicator was dead on. It was a sell. And then we got this buy, which is a really nice winner on the way up for a winning day on Monday. And then if you look at Friday, Friday is incredible. You had this sell here. You may or may not have won. I was on vacation, so I can't speak to how this trade went, but I can speak to how this one went for sure. I can see it. We got the sell, the bar before the breakdown, and then you absolutely eviscerated the market. And that's what we're looking for. We're looking for these tops and bottoms off of key areas and reversals, and the indicator does an incredible job of catching those. So that's some examples there of how it works and what we do and how we make money using it. Now, we got about 15 minutes here. That's my spiel on the indicator and everything else. So we're going to go through the markets real quick. I told my team yesterday, and if you watch my overnight video, you'll know. Let me zoom out here on this to the 3-hour. That we were looking for a high. So I said that this was likely a wave 4, and we were looking for a wave 5 into 67.44 to 67.50, which happens to coincide with our one-day max today on the ES. If we go over to the ES chart on with our Mentor Q levels, I love when this happens. We have a level of 67.50 that is a big selling shelf. And if we come up here to 67.50, once the Mentor Q levels update, we will see that there is a one-day max at 67.52 or 67.51 and change. So right spot on where we're looking for. And you can see why. So you have this. I'll draw them in here real quick. This is where they came up to. This is the 3-hour chart. They failed here many, many times and then broke down. They came back up to this level, broke through, back tested that level, came up, back tested that level, came up, back tested that level, came up, and then finally broke through. And this breakthrough was what caused the cascading event, because they finally got through this level that was so important that they shot it on down. So a back test into this shelf is very, very common for them to come up and test that area. And especially given our structure, you have a nice A, B, C right into that level. And that's what we're looking for. And with the one-day max there, we saw yesterday they ripped it down at the open and then rocket ride higher. Today, I think we could see the opposite as a potential where they come up into 67.50 and absolutely reverse it down strongly, as our 1-day minimum is well below us down here at 66.20, I believe. Maybe lower. Where is it? Oh, it's 66.20. So plenty of room to the downside and a very wide range on the charts. I did mention we have 2 1-day maxes. That tells you that the volatility, the market makers are a little unclear on what's going on because there's been so much movement in both directions. That's not a very typical type of day where you break the overnight low and break the overnight high in the same day, and it's happened a few times now, so they're having a little trouble defining the range, and that happens when you get higher volatility. So our primary path is we're looking for them to come up into this zone where they're at right now. They're already turning down. Hopefully they push back up so we can get a sell off of it, and then we would look for them to start to come down in a wave C, where we'd look for them to ultimately go down to 6,400 or 6,440, where the 1.0 would reside for the C wave, and as well as major support on the weekly 21 moving average in that area. So that would be the primary path. The bull path is get above 67.54. You get through that with some force, so they can poke above it and fail. Obviously, they can do this. But if they get above it, back test, and then go, we're going to 68.50 to 6,900 after that. So the 67.50 level will be extremely important today, assuming they get there. See how they react, and that would be a great place should they turn down to short the market. NQ, same thing, a little different, but same type of look. They're right back to the 618, right back to these highs, which is also on that shelf of resistance. So you can see from over here, they had the same shelf going across. They tested it many times. They finally broke through. They back tested it on Monday. Now they're back testing it again today. It is also the 50 moving average on the 3-hour chart, and they are rejecting this zone again. So I could see them push a little higher to 25,105 on the NASDAQ. That is the 764, poke above that level, and then turn down to go let the ES hit that level. So they have not, ES has not gotten to the shelf yet. That would be the primary kind of support resistance zone we're looking at for the day for major trading action. Good luck trading, everyone. Welcome to the stream, Will. I need a month off from work so I can try out the indicator. Yeah. You can swing trade with it. I mean, you don't have to day trade. Swing trading is kills it as well. I noticed option prices for ATM at the money were double the usual. Do you just trade as usual, or does that affect things? So it depends. For the most part, when option prices elevate, we lower our size. You know, if they're $2 or so, I'll tend to stay with my normal sizing. If they get above, you know, $2.50, $3, that starts to get a little outrageous, and you don't want to overextend yourself on those kind of prices. So the biggest thing we do is reduce our sizing when the volatility gets higher and the options prices elevate like that. Elevated options prices indicate high volatility, meaning two-way moves in the market or potentially just a one-way down move. It rarely indicates just a bull move up. So bull moves up, those are considered dull markets that just kind of grind higher and grind higher and grind higher. They pull back a little bit, test support, grind higher, pull back a little bit, test support, grind higher. Those tend to be very dull markets, and you get very dull option pricing around $1.50. When you get elevated, you are looking at the potential for, like yesterday was elevated pricing. You got an 80-point move down, followed by whatever 120-point move back up into the green, and then back down at the close again. So you had two-way action all day, tons of volatility. You know, the market opened way deep, then ripped it higher, and then closed back down again at VWAP. So, or just bounced off VWAP and closed. So lots of volatility, and when the market prices are elevated, that is something to consider. That rejections off of resistance and support can come after they break it. So yesterday, they came in, they set a trend day down. But there was a tell yesterday. I told my group the one-day minimum was right here, right around here, I think. They broke through, and then they came down into heavy support down here. This is very heavy. You can see these three lines. Those are all support lines. And I said, this is going to be heavy support, and I will take the buy. Normally, we would ignore this buy because they had a trend day because they broke the pre-market low and kept going and then set a new low. But I said I'd take the buy because they were well below the one-day min. They were at a major support level, and they're just not going to get that far away from the one-day min very often. Friday, they did, but days like Friday are rare. So this was a tell to me that the buy would have been strong. We got the buy, we killed it, and took it. And that's, again, that's kind of understanding how markets work, and that's why we do these live streams so you guys can understand that as well. Good morning, Jacob and the IWJ crew. Thanks, Maxime. Welcome to the stream. Hopefully you guys are enjoying it. We have about 10 minutes to the open. We've gone through the counts and what we expect today. 669 huge level on the SPY, and 6750 on the ES, and then 25,100 and 25,000 the current level right now, both big levels on the NASDAQ. RTY leading the way again. This is a bad sign for the markets. So when you have a rate cut, you want tech to lead. You want tech to crush. Yesterday, tech was a dog and RTY was a monster. Today, RTY is still ahead of tech, and that is a bad sign because when rate cuts happen, you want to see the market say, cool, we're back into tech strong. And when they aren't and small caps start to lead, that's generally late cycle investing. And the markets tend to find a pretty major top after that. So when I say after that, I don't mean today or tomorrow. That can take months, but it's not a good sign for the future of the market, whether it's the first quarter of 2026 or the last quarter of this year. I can't tell you until we start to break support, but this is clearly not a good sign for the markets. We also are I haven't looked since Friday, but going into Friday, the market was more leveraged than it's ever been in the history of the market, and people got liquidated left and right. So when the market gets over leveraged, you start to see these crazy moves happen, and it's also another sign of euphoria because people are piling into 3X funds, and there's more and more and more 3X funds coming out every day, and retail is getting over leveraged and ultimately will get destroyed. So there are a lot of warning signs in the market, but until support breaks, guys, ride the wave high. The euphoric markets can go far beyond your expectation. They've gone beyond mine already, and they can go far beyond it. That's not overly shocking when that happens. You get blow off tops. You get people piling. You have people calling for 10,000 in gold, 1 million in Bitcoin. These are insane numbers. Insane. These are people that are getting so euphoric that they don't truly understand market dynamics and how they work. Gold is in a euphoric state right now. I would not get in the way of gold. Let's see where it's at. It was up 8 earlier. So gold's given some back. It was up here at 388. 380 is a very heavy call wall for gold. And the one-day max is below price. So they got back below this one-day max, and then this one is still below price, and 382 is a big call wall, and 380 is a big call wall. I would expect them to come back towards this 380 zone, and if they hold, then push higher. But if they break through this, that turns into a very, very quick cascading event down. Now, I do think gold has more in the tank. I do think they can make a low, come back, and then push back up, probably around I think it's 318. They have really good support on GLD, but they're at a major level on gold with major euphoria running, and that's usually when you see the hammer drop and people get smoked. So we'll keep an eye on that today, just in the background. One thing we always do is we look at supporting evidence. Yesterday, supporting evidence was the RTY. It was heavily green while the market was down early. That was another tell that the sell-off was likely to be short-lived. Today, everything up top is green. The transports, they don't report before the market. Banks are green. That's generally supportive of the market. SMH, I believe, is green. Yeah, heavily green. NVIDIA, the Mag 7 was red yesterday, and you can see NVIDIA was down 4% yesterday, and it's got about half that back so far. So when the market, is moving like it was yesterday, and NVIDIA and the Mag 7 aren't on board, that's something to keep an eye on. That's a warning sign, and they're making lower highs on a lot of these charts. Meta was down 7 yesterday. It's got about 5 of that back. Microsoft was down a little. They've already recovered yesterday's losses. Netflix was red yesterday. They're a little bit red today. Amazon was red yesterday. They're a little bit red today. So when you see all the markets green and the Mag 7 not participating, it's a worrisome sign. Tesla has gotten back most of its losses from yesterday. Apple was green yesterday and is green today. And Google green today as well. Google, Apple, Amazon, they all look like they need a 4 or 5, so they need another all-time high in my opinion. So I do think that should we follow our primary path down, it'll get bought. So if they get down to 64.40, I think that will get bought off the weekly 21 and we will see another high. And that could be one of those euphoric runs where it goes really hard, ripping back to like 6,900, 7,000. And that could be, we'll have to see how it all works out, but that could be a beginning of the end type run for the market. For swing trading, would you recommend the daily or the weekly? Performs well on both. I use the weekly. It performs better on the weekly, in my opinion. Now, on the weekly, if you're using it, you need to take it at least minimum 3. I prefer 5 or 6 months because it takes a while for weekly charts to play out. You can get you can get a sell on a weekly chart that maybe has a little bit of upside and then goes down, or sideways action and then goes down. So I wouldn't be taking it for like 3 weeks out. I'd be taking it for 3 months minimum. A lot of times you can try to use seasonality in your favor. So if you get a sell, say in September and October are usually pretty weak months, and November starts to get good again. So you could go out, till mid to end November to give yourself time. But I would use the weekly personally. And welcome to the stream. All right, here we go. Getting ready to open. As of right now, we'll have to see how it plays out. We already have a sell on the board, so we'll have to see either a sell stop to get another sell, or they'll have to go down a little further to give us a buy. We won't get a buy signal from here. We're not far enough into this selling cycle. So either we'll get a sell stop and then look for a sell, or they'll go down further and we'll get a buy. We'll see how it plays here at the open. Let's have a good day, everybody. I think we could see like yesterday. Yesterday we had a sell at the open, which was perfect. So hopefully today we get a little spike down and then a buy at the open, which would be perfect. And then they come up to our 67.40 to 67.50 area, and we get a sell up there. That would be kind of ideal. All right, about 30 seconds to the open. R. Smith, welcome to the stream. Good luck, everyone. Let's have a great day. Here we go. All right. There is the move down here. I'd like to see him maybe come into this support right here and give us a buy. Yesterday's high to this month's open. These are two nice levels. You can see they kind of consolidated across here before moving up. They also came down and spiked the open or the high from yesterday, back tested it. So this area would be a nice area to get a buy should we get the setup. NASDAQ needs to fall a little more. ES is now moving into the zone of our next move being a buy. But I'd be very careful, guys. We came up into resistance. You see the gamma call wall there. The 1 day max is just above us, so we may not get a buy. I mean, this could just sell. This could just absolutely sell and rip to the downside. We always wait for setups. We always wait for the indicator to kind of give us guidance on what's happening because it's looking at all the inputs. It's looking at where the weaknesses are, where the volumes are, where the high levels are, the key levels, excuse me, to trade off of. So we always are patient. We don't try to chase. We're not going to try to chase a sell here because they're coming down into support. They're bouncing off that support zone I mentioned, the monthly open. We still need NASDAQ to come down some more, though. It's still in a weak buying cycle. So if you don't know what that means, when you have a sell here, it's actually in a buy cycle. So you had a buy down here, they ripped it up, and then it started to weaken. So it said, hey, we should sell here because the buy cycle is getting weak and we're at major resistance. So you had a major resistance zone, you had a weak buy cycle, and you got a nice move down from 67.38 to 67.26. We need to switch over the SPY. So you had a 12-point move down, which is a winning trade. You were looking for 7 to 10 points. That was 12. That would give you the 20%. At any rate, it's still in a weakening buy cycle. Now, the ES has moved into a sell cycle, but the NASDAQ is still in a weakening buy cycle. So what happens is you're in a weakening buy cycle until you aren't, goes into a sell cycle, and then once that sell cycle weakens, you get a buy signal. So we'll see how it plays out. Let's go over to the SPY where we're supposed to be. And again, came right down into this support zone, held, and bounced. So I would say now, well, I guess it really depends. We still have plenty of time on this candle, but now we're probably looking for something like a sell stop and a short, but we'll see. We'll see how they react off of this zone. There's still a lot of time on this candle. George T. Hello, Jacob. Welcome to the stream, George. NASDAQ still pushing a big red bar down. ES trying to turn green. NASDAQ is generally going to be your leader, so watch for this to continue down. NASDAQ is coming back into support, so we'll see how it goes from here. But NASDAQ typically is going to lead the ES. So if you see the NASDAQ weak, ES generally follows. That's not always the case, but that's a general rule of thumb, especially in a tech bubble. So if we go over to NQ real quick, because we're not going to get any kind of signal here, I can tell you, because we have two markets doing two different things. You can see the NASDAQ's first bar is down here still at support, pounding on support, whereas ES just turned green. ES and SPY. So keep an eye on that, because if NASDAQ starts to break down, the ES will follow. We do have heavy support right here again at 665.14. That's going to be, and then really 665, this call resistance wall. That's going to be heavy support. You can see that's where they broke down from yesterday. So back testing that zone makes a lot of sense. If they break that, they will accelerate down into this 663 zone. So this 665 is the key. The NASDAQ has moved far enough down. If it can close without getting too aggressively green here, it has moved into a sell cycle. So we could see a buy coming in if NASDAQ doesn't, like I said, doesn't get too aggressive on the green side of things here. Much like yesterday, if they push above the trend pre-market high, and then come back and test and create that Nasdaq as it did turn red there. Still at support, but kind of poking into some slightly dangerous territory. But we can get a buy here, so we will take a look at that. 667 is my current strike for that. I may move it to 668 depending on where the buy signal comes in. But we would be looking for a buy here. If they fail below this low, though, that can open the door at least down to 665, but down to 665.84. If not there, 665 would be next. If we get failure here. I'm going to move this to 668 strike. I think it's going to be up in that range, in the 667 range before we get a call, if we get a call. So I'm sitting on a 668 strike for today. Right now, waiting to see if we get a buy signal. The issue here is the NASDAQ. It is lagging the ES. The ES is ready for a buy. The NASDAQ is not because the NASDAQ was very weak at the open. ES is through its pre-market high. NASDAQ not there yet, and that's why we're not getting a buy signal. NASDAQ is lagging, and it's a little bit of a warning. We do have pretty strong internals. We are positive 1600 on the ADD, which is usually a very bullish type of day. You have bullish Vold, but that obviously can change as things happen here. We'll see if. Remember, this area is going to be heavy resistance, so it's going to be a short-term buy, in my opinion, should we get one. Lots of buffering. That's odd. I have a. It says I have an excellent connection, so hopefully that's stopped. I'm not sure what happened there, but hopefully that went away. All right, starting to see some breakdown here. Back to support. NASDAQ making another lower low and leading. That is problematic for the bulls, which is why we never got a buy here, because the NASDAQ never got on board with the move up. So we are continuing in the sell cycle for now. We'll see if they react around 665. Well, here, I mean, they're at support again on the ES, or on the SPY, I should say. So we'll see if they are able to break down here and break support, or if we're just getting a small pullback to test yesterday's high, which again is that 665 zone. That is going to be a major level. And then from there, we'll see if they're, well, they got to get there first. But should they get there, we'll see if they can hold or not. NASDAQ is trying to break that level right now. They're testing it strongly. This will be a very critical zone. If NASDAQ breaks through, they're on their way to very likely 24,695 or so. You could see a pretty quick drop of 300 points in the NASDAQ, which would obviously bring ES down with it. NASDAQ needs to get through 24,875-ish, 24,860, 875 in that zone. They get through that, and we should see some pretty quick selling. If they don't get through that, then we can see a buy back to the one-day max here. So critical time for both the bulls and the bears early in the day to kind of establish a little bit of tone, if you will. ADD is falling. It was at plus 1,600. It's now plus 1,400. So that is something to keep an eye on as well. You generally want to see it climbing or holding steady on moves like this. A lot of chop here at the start of the day. You got, there's our buy signal. So 128 at 668. Our stop is going to be 666.80. I had to do some quick math there. We'll be long here. And we do have a new, sorry guys, let me get this in. We do have a new strategy for those of you that don't know, and that is when we get halfway to our target. So in this case, we're looking at 24 and about 26 cents. So 13 would be 41. So when we get to 141, we will move our stop 25 cents up to limit our losses, because once you kind of get 10%, if they come back red again, they're not typically going back up. So we are going to move our stop here from 666.80 to 667.05. And then once we get to 3/4, which would be, let's see, 13 is 41 to 7, 148, we will move it to break even. So if we get to 148, 149, we'll move our stop to 128 on the option price, and then we're guaranteed a break even at worst. We're very close to that now, so let's see if they push to a new high here. Give us a squeeze to that one-day max area. There it is. Okay, so we're gonna move our stop to break even. So our stop is now 128, and we'll see if they can push on out to our target, which is 154. Which we may have hit. I was in the middle of typing there. I don't have it in. I'm doing too many things. 154 is the target, though. Very close here. There it is. 154. Close half of our trade. So there's our winner to start the day. Now we're going to see if we can get a runner. The 1-day max is going to be our next profit take. So 669. We're going to probably just before it because very often you can get a tag of that and a smash down. So we do want to take it maybe like at 668.90 or so. We keep a trailing stop of 50 cents roughly once it gets there. So our stop was 128. We hit 154, so that was about 26 cents or so. Now it's up to now it's up to about 30 cents, and it was at the high close to 50 cents. And then we'll trail that stop 50 cents to give us room for small pullbacks during these types of moves. That gives us a chance to catch as much of the runner as possible without taking too big of a hit on the back down. So right now our stop is at 128, so we're guaranteed a 10% winner here. And if they can run up to the 1-day max, we'll do much better. But that's the next natural resistance zone. And that one should be pretty heavy resistance. So if they blow through that, that will be a bullish development. Now, when I say blow through, I mean truly move through strongly, not just poke above it and return. Okay, we can move our stop to 130. It's only a 2-cent move, but a move nonetheless. And then we'll start trailing 50 cents from there on every 10-cent move. So once it goes to 190, we'll go to 140 and so on. Do you have time estimates of how long between signals? I don't know what you mean by that, Otis. Sorry. Welcome to stream, though. 700 soon. If they break out above the resistance, then 6850 to 7000 or 6900 would be next. Okay, we can move our stops to 140. Now we're guaranteed slightly better than 10%. And if we can get them to right up in here somewhere, we'll take profit. Probably could have taken it there at 190, but all right, let's close another half here at 195. So close half of your remaining portion at 195. And let's move our stops to 160. And we got ourselves a runner. Good trade. Coming into heavy resistance here, so I've moved my stops a little tighter. We're at 160, which is a 40-cent trailing stop because I don't want to give away too much, and I do expect them to defend pretty heavily here, at least back to probably 667, 69 to test the breakout. They can poke above this for sure. They can keep going, but this is a pretty heavy resistance zone right here. Internals are still bullish, so we will continue to ride this out until it fails. As I said, we would expect this area, though, to be pretty strong resistance. Let's move our stops to 170. Make that 180. I'm going to close another half here at 232. My stops are going to be 190. Hopefully you guys are enjoying the day. Pretty strong out of the gate trade. Got our buy signal that they ripped up. They're through the 1 day max now. I would again be looking for them to try to turn down this area. This is a pretty strong move by the bulls, I'm not going to lie. There was zero acknowledgement of this zone right here. We're going to move our stops to 220. I'm going to close another half here, and this will be our last half close for 275. Oh, 280. I was going to do 275, but it gave me 280. That's pretty good. 280. And we're going to move our stops to 240. This is moving quick. I'll be honest. This 1 day max. I do believe they will get below. But this is pretty impressive by the Bulls. Texas Trader, I think you should still have audio, hopefully. I just don't talk all that much when I'm trading because there's a lot going on, so I just give updates. And welcome to the stream, Captain Price. Big bull squeeze here. Yeah, very big. And we had it nailed. Got the buy right off support. So I told you this area here would be critical to break. If they broke it, then we could see them come down to 665. They could not break it, and then bang, squeeze. So our stops are at 240 currently and climbing quickly. We're going to move our stops to 250. And now we just trail until we stop out. All right, there's the stop out at 250. Really nice trade to start the day. If we get a put here, I may take one shot and see if, because this area should be still heavy resistance. The spike through, I think, could be a trap. So I will take one shot at a put should we get a sell signal, because they're really far from the 21, which is all the way down here at the breakout, which they should want to back test, or at least the 8. And this was a really kind of straight up overbought move on the short-term charts. So we'll keep an eye on it. Right now we'll have a 669 put. Set up, and we'll see if we get any kind of selling, or if this is just a quick dive down to stop out people and then continuation move. The Nasdaq did come up and hit its 764 on the penny, 25, well, almost the penny I think, not quite, but 25,105. It hit 25,110 and so far has turned down a little. We'll see if they fully reject or not here. Um, but this should, again, as I've said, be heavy resistance zone. You guys still with me? There was some audio question. I want to make sure that you guys can hear me and that everything's good. Thank you, Zamanzis. Welcome to the stream. Thanks, Otis. Again, guys, we are above the call resistance, which is positive gamma, which causes squeezes. However, the 1-day max is generally the place that they want to close this market below and ultimately defend. Now, they will allow traps and things to happen, poke above it and reverse, but this is not showing signs of reversal just yet. We do have one red bar, but you're going to need more than one red bar to get a reversal, and they need to get back below this 669 level to get that started. Ultimately, they'll need to get through the 8. If they get through that, they're going to come test the 21 at 667, and we'll see what happens there. They don't have to break down in any way, but I would expect them to come back to the 21 just because they are very extended, and this is very bought here. This was a breakout from 667 to 670, 30-point ES move in 3 bars, which is a pretty strong 5-minute run, or a pretty strong run on the 5-minute chart. I missed that buy, still in the trade. No, we got stopped out. Will, I actually got to do the accounting on that. I did not give us our average exit. I thought we might get a short, so I stopped doing stuff for a minute to prepare for that. So let me get our average exit here. 188 average exit there. Again, I will take one put. We are in trend day parameters. So we do have to respect that the trend is up, but we are seeing a little tiny bit of red in the ADD, and we are above the 1 day max, which typically will contain the move. On days of extreme pressure, though, we can see, obviously, the analogy I gave of the hurricane, we can see them push through these levels. But we'll give them one shot to reverse it and bring it back down to test the 21. That's all the way down at 667.94. It's about 2 points down from here, which would be a winning trade. And if they give us a put, they still have to give us a put. What's the wave count? This would technically be 5 of C as of right now. But they are above a key level, that 5750 area. And if they don't retreat soon, it will lead to most likely all-time highs. So we would count that wave down on Friday as wave 4, and this is a bigger wave 5 towards 6850 to 6900. I went over that in the beginning of the video. You can always rewind and check that out. Remember, guys, everything is a guideline. So the 6750 area on ES is a guideline. It's actually 6752. If you want to go long here and put a stop below 6745, you can certainly do that, or stop around 6745. However, that is not something I necessarily would suggest. I do think we could see a B wave pullback either way. So where this wave up now would be A, then you'd get a B wave pullback, and then C up again towards that 6850 to 6900 area. But generally, when you break the 764, which we have on the ES, but not on the NASDAQ, generally when you break the 764, they're going to challenge the highs or make a new high. And that is, again, just a guideline. It's not a some hard, fast rule that they have to go directly up. It is something that happens more often than it doesn't. And that's all trading is statistical advantages. Understanding what the market does when it breaks certain levels more often than not, and trading that advantage is what you're looking for. So the indicator looks for major support and resistance to hold, and then it sets up trades off of it. So for example, they came down here, they were in this major support zone, but the NASDAQ kept pushing on it, whereas the ES was a little more aggressive to the upside. And then once NASDAQ got on board, it said, cool, we held our major support zone. We've got the NASDAQ on board. We're back above all these moving averages on the 5-minute chart, so it issues the buy. There's other factors that go into that, the volume and different things as well. But it gets all the parameters met, so it issues the buy, because more often than not, you're going to see follow through. Do you always know? They have traps, they have failed breakouts, they have all kinds of different things, double tops. There are lots of ways the market can fail. However, more often than not, when you hold support and you get the set of parameters we got back to the upside, more often than not, they're going to break this level. Starting to see some consolidation here. Again, this is major resistance. They have pushed through the start of that resistance, but all of this is going to be a little bit of resistance in this zone. So if we go look at the ES chart, you can see that they came, the resistance line is right here, drawn based on all of the lower area, but you also have, a zone of resistance. It's not, um, you have this area as well that will provide resistance. So they do this a lot where the main zone gets broken and then the secondary zone holds, because it's a great way to trap. So you get people that want to get long because they broke support here or broke resistance, and that's not a bad deal. More often than not, when they break resistance, we see follow through. We got long, and they down here, and they followed through. But if they're setting a trap, this is not a terrible place. And then the next zone of resistance will be right here, because this bar was nasty. So the next major rejection point is going to be 67.83. Starting to see the ADD fade just a little bit here. Not a lot, not enough to be like, oh gosh, here we go. But a little weakness there. It's a pretty elevated number, 1635. That's a bullish number. You're going to want to see it really start to fade down below 1500 to start, and then continue to cascade down toward 1000, and then ultimately, if you want this to go down back towards zero. You do have PPI tomorrow, and that will be a catalyst as well. So we'll see if that is a bullish catalyst that sparks us to 68.50 directly, or a bearish catalyst that starts a down move that would be either a B wave for a more bullish move or a C wave for a more bearish move. We still have a fair amount of volatility priced into the options. Typically, that is not what you see on a just straight bull move, which is what today's been so far. Typically, that means there'll be some bear activity at some point. So we'll see if that comes to fruition and if the bears are able to make any hay here. The interesting thing is, typically, the faster the move into resistance, the more likely resistance is to hold. So interestingly, they kind of blew through it here with a little bit of momentum. But we'll see if the bears here, they're trying to make a little stab down. See if they have any follow through. First step is they got to get below the 8. This is your momentum indicator. The market blew way away from it, so now they're coming back in consolidation to allow the 8 to catch up to price. If they can get through the 8, they'll come to the 21, which is at about 668.35 right now, and continuing to move up because price is above it. And then if they get through that, VWAP would be the next step. If they get through VWAP, that's back testing this high right here from the pre-market. And getting through that will lead us back down to these lows, and through those will lead to acceleration to the downside. So the bears have a ways to go to kind of make something happen. But if they do, they can accelerate pretty quickly. Are you still recommending 50 contracts? Yeah, the options prices are a little elevated, but not out of control. So today we made 60 cents on that first one, which is a $3,000 gain. Always nice, good day. If you were more aggressive on this trade, you could have had a much bigger gain, but you also have a lot more risk when you do that. So we our risk reward is very solid and allows us to kind of maximize our gains while minimizing losses, and that's really what I'm personally looking for. Other people are more aggressive and will ride this all the way up to the 1 day max before they take their first profit, and then take half off there. I'm a little different in how I structure things, but it's been successful for me. Everybody's welcome to trade how they want to trade. I generally won't switch to a smaller position until or unless we get into the $3 plus range on contracts. I can move down $1 on the option price if I need to kind of make it right, or size down. You can do either one of those things, but I prefer to stay as close to at the money as possible. So sometimes we'll take at the money if they're cheap enough. Sometimes we'll take one strike out of the money. Most of the time we take the one strike out of the money because you're still getting good delta. You're still right there where price moves quick enough that you can grab a 20% win on the right move, and it gives you a little cheaper price. Green Emerald Frog, welcome to the stream. Bill, welcome to the stream. Would be crazy if we can hit 672 today after that cooking oil dump yesterday. Yeah, it's a little higher than I expected, honestly. Not a ton. That 1 day max area is where I was kind of pointing to in my video yesterday. So it wouldn't be outrageous, but certainly a very impressive move by the Bulls if they got to 672 or better. Again, guys, these levels are pretty solid. They're pretty much on point for where they want to close below. Again, can we have hurricane conditions like Friday? Sure, but those are few and far between. Even when they get past the 1 day max or the 1 day min, more often than not, by the end of the day, they're going to come back to it. All right, we're seeing the ADD move down a little more, slightly more aggressively. I wouldn't say aggressively, but more aggressively than it was. It's down around 1,500 positive now after hitting 1,750. So that's a good sign for a little bit of selling in the market. You need the NQ to get on board here, though. NQ is trying to make a high of the day, another high of the day, where ES is trying to turn down. So we're going to need NQ to try to get on board before we truly see any kind of drop. NQ is going to be the bellwether for all of it. On the start of the day down, the NQ led to the downside, which is why the ES couldn't break out. And as soon as the NQ got on board, we broke out. So it's always about what the NQ is doing. Right now, we're in a tech bubble, we're in an AI bubble, and the Mag 7 are the key to that bubble, especially NVIDIA. And that is kind of what makes the market go right now. You'll see days where the market has a breadth of, positive 1400, positive 1000, whatever, but the Mag 7 is red, and the market is either flat or red because the Mag 7 controls that much of the market. Not seeing any full weakness on the indicator yet. A lot of times I can kind of see when it starts to weaken. We're not there yet. They're still above the 8. The 8 is our momentum indicator on the 5-minute chart. And as long as they're above that, that is bullish momentum. As they get below that, then we start to look to the 21 to hold trend. So what you have is you have momentum is red, trend is blue, and backstop is black. It's the 8 EMA, the 21 EMA, and VWAP. And it can hold any of those levels to maintain the trend, but if it breaks below VWAP, then very often you're going to see what's called a failed breakout situation where we're going to head down to the pre-market low, which would be 664.17, and I believe even lower than that because, so down here at about 660. So a failed breakout here could lead to some pretty strong selling, at least I would think to 664, and if they can't hold that, then that 660 zone down below. Testing the 8 here. This will be an important time on the chart. NASDAQ still not really on board as it's gone sideways most of this time to up. ES moving down. ADD still moving down. It's right around 1500. Has not rebounded yet. Vold is pretty ordinary for a bullish day like this. You would expect a lot more buying and volume, and you're not seeing that. So, okay, NASDAQ trying to get on board now, which is why we're back testing here. They can close below the 8. That opens the door to the 21 and so on. They get below VWAP, though. That's really below the pre-market high now at this point because VWAP's basically the same thing. They can spike VWAP and then reverse it. But if they get below the pre-market high, that opens the door for a breakdown. ES wants to give it up. NASDAQ's just not on board yet, man. If NASDAQ gets on board, this can drop in a hurry. We do have a chance for a sell coming in now. We're starting to see weakness. Right now I'm sitting on a 669 strike for a put. But again, NASDAQ has got to get on board for this to work. We are seeing the ADD continue to drop. It's down to 1430 now, dropped another 70. This will be key. You got a 5-minute close below the 8, so that's good. The 8 is turning over. That is also positive. If they can continue to follow through and continue to close candles below the 8 on the ES, hopefully NASDAQ gets on board and we can get a put and we can get a rocket ride down, just like we got one up. That would be pretty awesome, really. Already have a good day. We can make it a great day. Yesterday was a great day. Monday was a good day. Friday was a great day. How was vacation? Did anything interesting happen? Yeah, my 1-year-old got Montezuma's revenge. Not the full dysentery, but the Mexican poops, that's for sure. He had diarrhea almost the whole trip. It was pretty rough. He did a great job though. He was very happy. He wasn't like crying or like sick or anything. His stomach just wasn't having it. But other than that, it was good. It was a lot of fun. From here, guys, if they do come back and make a new high, that'll be it for me today. I won't be testing the playing against the Bulls in that case. They're just back testing the 8 currently. If they do that and make a new high, that's going to be pretty strong overall. And while they can still fail higher and come back down, it's not what statistically happens most. So we will see how that goes. But if they do make a new high, that will be the end of the stream and trading for today, as we do have a trend day at that point, and trend days are just not good to try to short. Technically, we have a trend day right now. However, given the parameters, given that we're seeing the ADD now drop a little more aggressively, it's down under 1400. It's dropped about 400 here on this 15-minute bar, which is pretty good. And you also have the 1-day max right here. There is a high potential for a reversal here, or at least a pullback. So in this case, I will entertain a short, but only one, and we'll see how it goes. You know, if they fail that, then that we'll call it. And I'm not afraid to miss a move, and you shouldn't be either. If they come down here and they fail like this, and we get stopped out, and then they do this, that's okay with me. I'm not concerned about that, because more often than not, this one would fail as well, and then one up here would fail, and you're chasing these dreams that never happen. And then the one time they do happen, you're like, oh, see? And then you get bad habits, and you reinforce bad habits, and that's not good. You should miss trades. That should happen in your life, because you should have a set of parameters where you're not chasing every trade. So if you miss a move, there's going to be another move in like probably 10 minutes. I'm joking, obviously, but tomorrow, you know, it's not a big deal. Interesting how Bitcoin is not looking bullish. You know, I on my midday call the other day, I talked about it being a potential Wyckoff distribution top. Um, that only comes into effect if they break that, I think it's 107 zone. But if they break that 107 zone, they'll be at 100 in a blink of an eye. And if they can't hold 100, they will be at 80 or 75 very, very, very quickly. That liquidation on Friday was no joke, and Bitcoin has become completely over leveraged, which is why you saw that liquidation event. You saw like 12 million people get liquidated. And um, when Bitcoin decides it's done going up, it can be super nasty. All right, that candle closed basically at the 8, and we're seeing, a little bit of red here, but bears really need to. Well, it's the Nasdaq. The ES is doing fine. It's back to the 1-day max. It's doing what it's supposed to do, but the Nasdaq is still going sideways mostly, slightly down, but mostly sideways. If Nasdaq can find that breakdown bar, it will cause a cascading event on the ES. Still seeing the ADD drop. That was a good close there for the bears on the ADD for that 15-minute bar. They dropped it about 250, and it's still dropping on this next bar. It's red. So the advanced decline is still bullish. It's still positive. It's positive 1,370, but dropping, or is in the middle of dropping. We'll see if they can follow through. Poor kid. Yeah. He didn't love it. Will. Does this rally in markets look like a systematic melt up to you, or is this just hedge funds doing a great job sucking in every last cent of retail money? Unsure, honestly. The volume on Friday. So there's a few things. The volume on Friday was huge. The statistics would tell you that when you have an all-time high on a Friday and then you have a major sell-off, typically, statistically, that is not going to be the low that the market makes on that move down. That is statistically what happens. Now, statistics are just that. Something can happen 10% of the time, 20% of the time, whatever. This move back to this level that they came to today is not super unexpected. They're back testing the breakdown, and they spiked through it so far, but now they're back down to where they broke down from. And if they reject here, this rejection can turn super strong, super fast. That's a lot of supers. It can be a very strong rejection, so strong that like down to 6,400, which is the 21 weekly. So if they get to the 21 weekly, or if they start to break down here with some momentum, which is what you would expect, it'd be a C wave, and you would expect it to be pretty darn straight down. And don't think that means this has to just go right now. It doesn't have to go today even. It can go tomorrow or the next day, but it does need to hold kind of where we're at. Statistically, we would look for them to come back to the 21 on the weekly, which again is around that 6440 area on the ES, and then see what happens there. I would expect a bounce there for sure. Now that bounce is going to be telling. If they bounce and it's strong and we start to look like we're going to go back to all-time highs, then, and that's kind of what I expect, based on a lot of the Mag 7 charts. A lot of them still need a 4-5, like Apple, Amazon, Google, NVIDIA. They still need a 4-5, so this pullback here could be 4 and then back up in 5. That would be that could be a very, very kind of euphoric, strong rally. But it kind of depends. This is an incredible trap. Right here, they came right back to the resistance area. They even moved through it, which is very trappy. And now they're coming back down, and we'll see how they react here. I've been saying all morning this 1-day max is likely to hold, and they pushed through it, and now they're back to it. So we'll see if it holds. But we're not there yet. But any move back over this high starts to look pretty bullish. Keep in mind, we're kind of on the cusp of getting a sell here, so I don't necessarily want to change charts. I can look over here. We'll try real quick. People get confused by this kind of stuff. Just way back here somewhere. Maybe even this one. I can't remember. Let's look. Yeah. So keep in mind, they can retrace well past the 764. This is a good example right here. This is 2024. Yeah. This was the move down, the initial move down. Then they came all the way back up, and everybody said, oh, new all-time highs incoming. And then they got eviscerated and taken all the way down. You know, keep going, keep going to here. So just because they overshoot the 764 doesn't mean they won't trap you into oblivion. Same thing happened in, I think, more evident on the NASDAQ, actually. In 2022, where's that at? Are we at 2022? What year? That's 2023. So it's more evident on the NASDAQ. This was a pretty standard retrace right here. The NASDAQ came up to about right here on its retrace. It was very deep. And then, again, you got eviscerated to the downside. So just because they overshoot the 764 doesn't mean they aren't trapping you. In fact, it can be just the opposite. The more they push toward the highs, the bigger the trap, because then they get all of the buy-in from everybody saying, "Oh, we're going back to all-time highs. I'm loading up," and that's where people get drilled. So we're seeing a little bit of still NASDAQ not fully on board, but we're seeing the test of the 21 here. They broke the 8, so now they got to test the 21. They're pretty close to it. That's I would call that a test of it so far. ADD down to 1276 now and falling. So it's down about 500 from the highs, 400 in the last 2 bars. So we're starting to see the market weaken just a little bit. It's still very bullish. 1275 positive is still a very bullish number. So don't get that twisted into, oh, we're definitely going down. But it is showing some weakness. We're just not seeing it in any of the NASDAQ, and the NASDAQ needs to lead. If the NASDAQ's not leading, then we're all kind of just waiting on the next high. But keep in mind, the NASDAQ likes to do, so the ES will do this, and then the NASDAQ likes to do this, and then this, and catch up real fast, and then the ES trails. So just because the NASDAQ isn't on board yet doesn't mean they can't catch up in a hurry. Yesterday the ES did something very similar down here that the NASDAQ's doing, where the market was weak. We actually had a sell signal right here. We don't take it. This is after 10 o'clock. It was a trend day, blah, blah, blah. But the market said it's weak, and then the market didn't do anything. And then all of a sudden they did this. So they like to lull you to sleep, kind of make you think that everything's fine. We're just consolidating for the big push at the end, which is what everybody's grown accustomed to. And then they smacked them down here. So we'll see again what happens. They got to get through the 21. But if they get through VWAP, that is a warning sign to the bulls. And it's not that far down. It's about a bucket down from here. As we've seen, 10-point moves on the charts today are not too hard to come by. Man, the NASDAQ is just slow drift. So you see the ES here. You see the red bars here. And then I guess the Qs are doing okay. What's NASDAQ? The Qs are below the 8 finally. But the NASDAQ itself, eh. ES came down already into this zone here. NASDAQ's been more of a slow roller here. If they can follow through, here's kind of the key level for the NASDAQ up top. They came down to it, tested it. They kind of tested it here. But if they break that level, that 25,000 basically, 25,072, they'll come down and test 25,055, and then 25,25, and then 24,972. Well, Netflix is red, so that's something. Gold and silver still ripping. Bitcoin's in dangerous territory. It's really got to find a buyer soon, or it's going to be looking down quick. I feel the NASDAQ is going to cause us to be left behind on this short. They've already dropped it a little over 2 points on the ES, which is pretty good. That's a nice drop. Back testing the 21, which is pretty standard, and the NASDAQ is just not given us enough weakness to ignite a sell. So, and we're 3 bars into the sell on the ES now, which means if we get one more bar, we're unlikely to get a sell on the NASDAQ. But we'll see. ADD still dropping. It's down to 1,200 now, down about 550 off the highs. All right, guys. With the NASDAQ not getting on board, we may get, a spike here that allows a sell stop on the ES and then a new sell to occur. But for the purpose of the live stream, we're kind of in this slow, dull pullback testing the 21. We'll have to see something different happen for me to get on board with a sell. We've already lost 2 points here and we're at the 21. This was kind of the move I was looking for at a minimum, and they've already given it away, so I don't love anything from here, even though we are in a trend day. So I think I am going to go ahead and call the stream here. It was a very successful stream, even though slow, one trade only, but that one trade was pretty awesome. So we're going to go ahead and wrap it up here, and we're too far into this selling cycle for the NASDAQ to hit. In fact, the NASDAQ just gave us the sell, and obviously you don't see it on the screen here because ES has already gone too far through the cycle. We're too deep. We're chasing at that point. So unfortunately, we won't get the sell we were looking for because NASDAQ never got on board. And with that, we're going to go ahead and call the live stream a successful day. Nice big straight run up here on the buy signal. And we'll do it again next Wednesday. Thank you guys very much for being here and trading with me. If you liked what you saw today, of course, check out the indicator. You can get it for 30% off. Those of you that did will get you access here shortly. And everybody else, have a wonderful Wednesday and rest of your week. And I will see you guys next week.